Hey guys, my name is Adam from dodjit.com and this is your video briefing for the 1st of September 2009. Now, first of all, I'd like to apologize. We haven't got any videos out lately, and the main reason for that is because we had a few problems on the site that we had to get sorted out. And also, we've been slightly developing the site. I'm sure you've noticed over the last couple of days, we've been adding more content. We've got now a report that's coming out in the morning, and normally we get one out also in the afternoon, which is roughly around 2 p.m. GMT time. Now, also in addition to that, I don't know if you've also noticed, we're getting these charts out. We've had a lot of requests from all different clients that they want to see more charts on the website, so we're trying to now post a daily chart, and also we try to do a little bit of a report about a previous chart that was either posted a couple of days beforehand or the day beforehand, and we're trying to get a lot more pictures out on the site, you know, to help you out with your trading. A lot of trend lines, a lot of support and resistance, and also on the forum we're starting to share a few different trades. Hopefully in the next couple of months we're going to also have up signals on the site, and there are going to be some more surprises on the site, so keep your eyes out for all of that stuff. Let's flip over to the markets to see what's been happening. What we're going to do is we're going to start off with the S&P 500 like we normally do. In this video we can see that we've really rallied up since March. We've had this massive climb, retracement, climb, retracement, and now we are climbing higher. And yesterday was the last day of August, and today we're starting the first day of September, and the markets dropped. The markets dropped. The S&P 500 dropped by 0.81%. The Nasdaq dropped by over 1%. Now, there is this kind of myth on Wall Street, and you know, if you look at the statistics, you'll see that normally the month of September isn't really that much of a good month for stocks. So basically, if that's going to happen this year as well, so then obviously we're going to be looking for a correction on the markets. Now, the S&P 500 normally corrects a couple of percent during September, not all the time obviously, but it happens. Now, what I'm thinking this September, I'm not so sure if we're going to see that much of a correction, and the reason for that is because, think about it, we're now coming out of this massive recession. People are looking where to put their money. They're not finding it in bonds because the yields at the moment are very, very low. And what they're looking for is they're starting to look for opportunities in equities or in the Forex market or in more riskier markets. Now, if you look carefully, the markets did correct yesterday. We are at the moment within this massive trend going higher, and we've got our secondary line, which is our secondary trend line, going higher like that. So we've got support around this level. Now, if you draw also a horizontal support line, we can see that this line, this resistance line, it acted as resistance over here, it acted as support over here. We can see that this support level along with our trend line support coincide. So we're looking for some major support around this area. Now, the problem is at the moment futures are pointing towards a negative open in the US, but what I do want to state is that over the last couple of days, even though we've been having these negative sessions, the markets, they've managed to find support towards the end of the trading day. And I always state this also, you know, also in the forum, and we state this also on the reports. You should always look towards the end of the US session. We get a nice direction towards the end of the session, which is sometimes characterized by also a turnaround during the intraday session. So what we're looking at for at the moment is, yes, we are looking for a correction. I'm not looking for anything major, especially as economic data is coming out. It's coming out quite good. We've got this NFP result coming out on Friday, which could obviously turn everything around. You've got the support levels, you've got one here, you've got one at 975 if we do receive this correction. If we don't receive correction and we can continue to consolidate around the 1025 mark, so then look for a break of our highest level of 1039.47. That will be our cue to take this market higher. You've got the levels. Let's just flip over now to a few different Forex charts. And the first chart that I'm looking at is the euro against the US dollar. Now, we stated that a few of the charts at the moment are showing these bullish triangles, and that's something you want to look out for. The Australian dollar against the US dollar, euro against the US dollar. If we look carefully, we are in this massive trend going higher. look, we've got this massive trend at the moment going higher like that. Now, in addition, we've got this resistance level roughly around here, and if you look, these two lines coincide. We've got this bullish triangle pattern going along here. Now, what I want to say at the moment is like this. Even if we do receive a break to the upside, you want to watch out, because we've received a fake out roughly around here, around this area. We received a fake out also around this area, around here. So if we are going to receive a breakout, I want to see something that is going to at least clear this level roughly around here. Otherwise, be careful. Use correct portfolio management, use a stop loss, because it could end up also being another fake out, and we don't want to get caught out on it this time. So you have the two levels. You've got the 1.4447, you've got the 1.4377, roughly around this area around here. Watch for a breakout. Obviously, if the NFP result comes out on Friday, disappoints, and then yes, we could see some dollar strength. Let's just flip over to another chart as well. And the next chart that I'm looking at is the US dollar against the Canadian dollar. It's a daily chart, and the reason why I'm showing you this is because we're at the moment forming this symmetrical continuation pattern, and basically I'm not really that sure if it's going to continue lower. Let's just take a look. We've got this trend line going roughly around here. Now, we stated about this trend line quite a few times over the website. We've posted this type of chart over the website, and we've also shown you this fake out around here. We even took a trade. We took a nice short trade to the upside and closed the trade around our trend line resistance around here. Now, what I'm looking at the moment is like this. We did form a spinning top yesterday, but we're not receiving our confirmation candle, which is roughly around here. You can see it around here. We're now climbing higher, so we're not receiving a confirmation candle to the downside. Now, yesterday GDP results in Canada came out a little bit under expectations. They were better than the previous quarters, but they weren't as good as markets were expecting. So obviously the dollar rallied throughout the session. Now, the reason why it turned around is because in the end all these markets are correlated, and basically the overall momentum of the dollar just had an effect, and it wasn't really that much of a good session for the dollar, so it just turned around and lost all its steam throughout the session. What I'm looking for at the moment is a break of these two lines. So we've got our continuation triangle roughly around here. I'm not so sure if we're going to continue to the downside. Again, it really depends on the data that's coming out at the end of the week. You've got the levels of the breakout. We've got this level to the downside. We've got our trend line resistance to the upside. You've got the levels. Let's see how it plays out. My name is Adam from dodjit.com.